Good morning, traders. I'm Greg McKenna. Welcome to Markets Morning. It is the 10th of October 2018, Wednesday, and it's been an interesting night. The US dollar couldn't hold on to its gains. Euro got down into the 114.30s, but now it's back up at 114.90 odd, just under 115. US stocks opened higher, but couldn't hold on to their gains, and they are back and they are down. The S&P 500 closing down about 0.15% at 2880. The Dow was down about the same. The Nasdaq, however, saw a bit of a bounce in the tech stocks, and it was up 0.25%. In Europe, it had been a better day. Started out pretty poorly. The DAX futures got down to 11,786, which is not far from that 11,700 region I've been talking about as major and important support. But they managed to finish quite a bit higher. Italy shenanigans going on over there as well. Copper was up, which is good news for risk assets like the Aussie. The US dollar reversal was also good news for the Aussie. Aussie and Kiwi both up 0.4%. Sterling did best though. There is some fresh news that the Brexit deal may be actually around the corner. The Irish Foreign Minister Cavini did say that it'll probably be November rather than October, but then there were rumours floating around that it could be as early as next week. I think that was a Dow Jones source story I saw on Twitter. So that's helped sterling. It did best. It was up about 0.6, I think, at 131.40. If this is the case, and it certainly looks like on the chart, it could get back towards 132 high, maybe even 133, which is really vital and important resistance. Gold is at about 1187. The SPY was down 6 points. It's got very close, within 9 points of my target last night. Let's dive straight in, and we'll look at the euro. So we'll do forex, then we'll do commodities, then we'll swing back through to stocks, and then we'll have a quick look at Bitcoin, which really isn't doing anything around 6,600. Anyway, euro here. So you probably can't see. You need to drill down. So let's drill down into the 1 hours, and you can see this dip down into the 30s for the euro before this very strong bounce. Now you can see that this 115 sort of figure 10 region is going to be short-term decent resistance. But moving back to the dailies, which is where I spend my time, you can see also that 114.33 is the last line of Fibonacci resistance. Now, you might be surprised that I'm not that bearish right here and right now, and haven't been this week, really, I guess. So, pardon me. So what do I take from this? Well, it's still a lower high, and indeed it's still a lower low. So that tells you that the downtrend is still intact. The stochastics on that is a bit of a warning, but overall, on a 1 hour basis, if it got up through 115.06 or 115.10, I'd probably look to be going long. 4 hourly basis as well. So that region might offer a chance for euro to bounce. How far could it bounce? Well, if you think it's come from 118 to basically close to 400 points or pips, 4 big figures, the way I like to think about things, you could easily, let's draw a Fibbo. You could easily see, well, I think it probably starts from that there. What's a garden variety bounce? A garden variety bounce is 115.80. Is that possible? Of course it's possible. Will it happen? Time will tell. We'll see on that one. In terms of dollar yen, the reversal continues, and we're back down now at this region here is about the 38.2% retracement of this level here. The MACD is still rolling over. We're getting a little bit oversold, but essentially, if 112.80 gets taken out, then we could see a big dip. And I've written in the weeklies, we might even see it into the 111s. So keep an eye on that one. You can see this one. You can see that previous support over there as well. The fractal on that's 112.55. So that 112.55 to 112.80 on the short-term charts is going to be important for dollar yen. Little tiny bit of US dollar weakness. The question I've asked in Markets Morning today. Oh, by the way, I did forget to write in Markets Morning. The few hours, 4 hours I've got. To research and write. I did forget to write that while I was writing this morning, so I think about 6:30, maybe even 7 o'clock, Donald Trump did note that he doesn't think the Fed needs to raise rates. Now, the Fed's said they don't care. So that's the important thing there. So that didn't get a lot of traction because the Fed has said they don't care. Sterling looks good. We've got this nice little uptrend here. We've got, that's actually a Fibbo. Let's just do it. Take it down to 4 hours. We've got that to there. So that found support at the 23.6, and we're now back up at the 61.8. So a break of say 131.50 odd, and you're looking at a run back towards the 133 region, which is essentially what I've said in markets morning today. You know, the difference between sterling and euro, for example, is that we're starting to make higher highs. So it's starting to actually lift, and the positivity around Brexit has been a big support for sterling over the last few months, and indeed over since July, it's continued to be supported. The medium-term trend looks higher. So that does look to me like it will head back towards 133. In terms of the battler is doing well. This is the 4-hour charts. Yesterday, I suggested that it could get up to 71.15, that 38.2%. That would just be a normal garden variety type thing. There is a little bit of resistance right here and right now, though. If we just extrapolate a two-touch trend line to there, and so you'd say from here, 71.07 maybe to 71.15 might be some difficult wood to chop, but it's my sense that we might be able to get back to 71.40, maybe even 71.60. Consumer confidence is out, or consumer sentiment, I should say, is out today. It's not likely to be overly strong, so that could keep the Aussie a little bit offered. But have a look at the unemployment expectations index. I think that, for me, is the key thing. If people feel like they're going to keep their jobs, then people are not going to get too worried, and they are going to keep spending. Dollar CAD just itching for a breakout, isn't it? Hasn't got there yet. The CAD, whereas the Aussie and the Kiwi gained about 0.4% last night, the CAD only gained 0.15%. And that was despite a 0.5% rally in WTI, a 1% rally in Brent. Now, dollar CAD's correlation with crude and energy isn't that great anyway, and there are serious discounts for Canadian crude relative to what other places get. But so this is the key thing. If you get a break of this, and I'm going to say what I normally say, McKenna mantra: respect it unless or until it breaks. And I'd have to see it take out that fractal. Come on, 130.10. Give it 10 points. We'll call it 130.20 for a clear break, and it can run. Otherwise, it does look like it might head a little bit lower. That all fits with dollar yen, sterling, Aussie. And we're just going to have a look at Kiwi now and see where that, even euro to a certain extent. So a bit like the Aussie. If you go back and have a look, similar sort of deal, similar sort of base, probably similar sort of trend line. If we do that, same sort of level to watch. So that's what's that? 64.95. And if we just do a quick Fibbo on there, and what do we got? So 65.03 would probably be where I'd be looking for it to head to, and maybe 65.28, 65.30, I should say, would probably be a level I'd be targeting. So you can see that the market could be a little bit full of greenbacks right now. I'm not exactly sure, but one thing that I keep mentioning, I keep writing, is that the US dollar does well when there are catalysts for the US dollar to do well. It drifts when those catalysts are absent. It's still a very light. It was a light day last night. And it's another light day tonight. Although PPI is out, so PPI could get things moving. Looking at gold now, and this is the wedge. It's a 1180, so it's really a kind of an 1160, 1220 market. 1217 if you want to be pinicky about it, but let's call it. But inside that, it's an 1180, 1220. So they're the main parameters. But you can see this would normally be resolved to the downside. This kind of chart pattern. So I do keep an eye on this. But for me, 1180 is the level that would need to break for me to get too troubled by. There's a fractal there at 1180.75. So I've called it 1180 is the key for me for gold. Copper had a nice rally last night. It's still within this band. Yesterday I mentioned that it went out but managed to close back in. It was up 1.79% in HGC terms, which is what this copper future, CFD, is all about. as I mentioned, I think I mentioned yesterday, I certainly wrote yesterday that everyone's bullish in London at LME week, based mostly on fundamentals. And so the extent now is that if China's kicked an own goal with the Triple R, if we know that Chinese growth is going to slow, if the financialization of copper meant that bets against the Chinese and global economy have been made using HGC, for example, or other copper contracts. The question now is all the bad news already priced in, and is it time for copper to make a break higher? For me, it's about this little tiny range. If it breaks this little tiny range, then I would get busy, but it's still got to get up through 293. So a break of 287 gets you to 293. 6 cents is nothing to sneeze at, of course, but that's where we kind of are when it comes to copper. And you can see here. So you've got 275. I'm calling that 245. Sorry, 274.50. And that's 286.5 roughly. So they're your parameters. You could probably extend it to go below that low there now, which was 273.35, and we're at 281. So you've got a decent trading range of 12 cents. Also, but keep in mind. Oh, by the way, the IMF downgraded expectations of growth from 3.9% for this year and next to 3.7%. That's still the same as what it was last year, which is still the best since 2011. So it's not like we need to be wringing our hands or getting too troubled by this. But overall, it's the first time that they've downgraded growth since about mid 2016. So that's where the interest comes in. Will it have any impact on oil? Probably not. Can oil fall on its own? Probably yes. Why is that? Because of what the chart suggests to me. So still seems to me that 72 sort of 14, which is the 38.2% of this move higher, PLA and sort of 72.70, which is some other numbers I've got. Will be so somewhere between the sort of the 15 and the 30 EMAs for me is where it will held. Yesterday I mentioned that it could bounce after that big long tail. It did. It's come back a little bit, and I'm still got those overall targets. I've got the MACD coming down, got the stochastics coming down. We've made a clear high, and there's a clear stop against that high. Position sizing obviously would be and is relative to the width of the stop loss, that kind of thing. This is where Brent was. So Brent actually I might have got wrong. Brent I wrote this morning suggests it could go down, but when you look at that, it's had a nice bounce and it's had a test. So for me, I'm wrong if 85.57 gives way. So my sense is now I'm happy to sell it with a stop at above 85.57. Not advice, of course. This is just explaining how I trade. And that would be a small stop. Or if you want it to be more adventurous, because often we get these, this high, and then you get a move and then a reversal, and then it comes down again. That's generally what happens with the MACDs. You can see that often in my charts if you've been watching my videos, and certainly on my. So an adventurous, much smaller position would be to have the stop on the other side of that recent high. So that's another way. That's another way I like to play it. Right. So what have we got? We've got stocks now. Let's go and find the S&P 500. So the S&P 500. The interesting thing here, it didn't make a lower low. So that's good news for the bulls. It did make a lower high. That's bad news for the bulls. Where are we though? Well, the fact that it gave up its early gains is interesting. The fact that it is still below that trend line is interesting. My sense is it's got to get back above 2,900, which is the trend line, for me to get excited and say that the downtrend may not be there. One of the things, though, when I mentioned the IMF, the outlook for US growth, I think, is stronger than people recognize. I've written in Markets Morning this morning about Mohamed El Arian and his view that we could get 3% this year and we could get 3% next year. I tend to agree with that. I am a US economic bull. I think that what we'll see from the US is similar to what we've seen in Australia over the last few years. Lots of people wanted to decry the ability of the Australian economy to keep on keeping on, but you should expect less variability in service-based economies. And now that the US economy has got back on its feet, then maybe a slowdown in the US rather than a recession is a fall in growth back into the low twos or something like that, or maybe even the high ones. But I'm not overly worried about a recession anytime soon. I'm more focused on growth, and that should support stocks. So just depends on what 10-year bonds do, I think. In terms of the local market, we almost got there last night. We fell to 95, so not far off. Uh, so low was 95, 5989 was the target here. So, this is a classic, first ever Greg McKenna trading system. You get a move, it stalls between the 31 and even normally it stalls between the 38.2, I should say, and the 50%, but sometimes it stalls at the 61. Now, it's kind of a very Elliott wave kind of approach, although I don't consider myself an Elliott wave-ish, and all those flats and, all those kind of X's and A's and B's and all that kind of stuff are lost on me. But you had the break, and then so the break of 60.89 targeted 100 points, and we got instead 91 points. So if that breaks, then it could be in strife. And if that breaks, then the target is this 5929, 5930 level from November 2005, which I've written as 2016. So there we go. Anyway, so that's how the local market looks. It looks like it's even though it's outside the Bollinger Bands, but that's what happens when you get a volatility compression. It needs to hold 5989 so as not to drop another 60 points. So we'll see what happens in our time zone today. Just second last but not least, the DAX. This is really important. 11.7. Let's have a look on the weeklies. 11.7 held. And that's the level that has to hold. If this breaks 11.7, then we start to get into a really big decline. But it's held for the moment. And the key thing for the DAX now is that is a very, very big pin bar. We'll see how markets open this afternoon. But that is a level to respect, even though it is, again, as I say, a lower high. So keep your eye on that. I don't have a big call other than I'm watching 11.7 because we are getting close. Last but not least, of course, is Bitcoin. Going nowhere, stalled, going nowhere. A little bit of an uptrend there, which it could break, but it's been very non-volatile. It's still got to get up and through 71.50 to get busy. Right, that's it from me. I've got meetings all day, presentations, a behavioural walk through the Australian economy today. So I will be back tomorrow. Have a great day. Bye for now.